let's jump into what Jérôme has been already painting for you. It's a case study in innovation on crypto and banking. And I would like to welcome on stage Alessandro from Crypto Finance, Peter Hubli from the Zürcher Kantonalbank, and the fireside chat will be moderated by Niki, Csanyi, the Executive Director of this entire CVA, this entire event, and the Crypto Valley Conference in June. Please, welcome on stage.
I'll take this one, and then you can grab one of the mics. Well, thank you for staying in the room. I hope my microphone is on. Yes? Okay. So I have the pleasure of welcoming one of the largest banks in Switzerland, largest cantonal bank and the second largest bank in Switzerland, Zürcher Kantonalbank, and their trusted partner, Crypto Finance, to dive into one of the case studies, or we call it a case study, but I would like to call it a success story, that we are very proud of to showcase in Switzerland and, of course, to the global audience as well. In 2024, September, so just 6 months ago, ZKB has launched its crypto offering to its retail clients and their B2B clients, offering Bitcoin and Ethereum. And we're here to dive in. We only have 15 minutes, so I don't really want to take a lot of time. I would like to start with a question to both of the parties about what do banks have to gain by implementing digital assets and offering it to their clients, or let's be a bit more cheeky and play devil's advocate. What do they lose if they don't? And let's start with the lose. Pedro, would you like to take the lead in here?
Yes, thank you. I guess there is a customer need for investments in digital assets in almost every bank. But most likely, most of them don't know it. So same happened to us. And what we did is we traced the outflow to crypto exchanges from our customers, excluding, and we were fair, excluding Swissquote and Revolut. And we did the period of end of 19 till mid of 2023. And we were totally shocked. As we have seen, we ended up in an amount of almost 600 million Swissy outflow to crypto exchanges. It was quite interesting that the money came back to us. So what we have seen, that's the reason why we find it out, because our compliance get crazy about the incoming flows. So it was interesting to see that our clients sent the money to the Baltics, Coinbase, for example, made their trades there, closed the trades, and sent the money immediately back to their safe haven bank in Switzerland. So they want to make crypto investments, but the trust level with the exchanges abroad was not that very high.
That's really good. And thank you so much for the insight. First, to share the number with us, which is astonishing. And then also to see that there's a really, really high level of trust that's still in the business. People want to make money. They want to use digital assets. But at the end of the day, they will still want to feel comfortable and secure to know where their funds are sitting. So thank you for sharing the insights. Alessandro, what's your opinion?
I think to start, I can only echo what Peter mentioned. I think the concept of outflows is one that is gaining more and more popularity. I think depending on the type of bank, whether it's a retail bank or whether it's a private bank or some sort of form, it actually takes a different form. Obviously, the nominal amount is something that normally can stand out, but generally what we also see is that the growth at which the outflows change over the years is also significant. And many banks also can choose to embrace it. I think that's also fair, especially if the nominal amounts aren't excessive. Having said this, let's put ourselves in the shoes of a private bank, which is generally dealing with a higher concentration of wealth and fewer customers. Losing the assets to potentially a competing player which has decided to step into the space might not be an issue when it comes to crypto, but obviously opens up the opportunity to lose other types of businesses, right? And one thing which is also not normally talked about, it's the additional risk exposure, which a bank that decides not to offer crypto assets is also exposed to by having its customer base bring their assets to other types of venues, whether they're unregulated or simply exotic marketplaces. So, you know, it's always funny sometimes when, back in the day when the ETFs in the US got first approved, a lot of the conversation was, oh, it took them quite a bit. And what was staggering is that the regulator, which is generally focused on protecting the consumers, actually took so long to allow a regulated structure to give exposure to those customers, which up until that point were bringing their money on exchanges like Peter mentioned. So risk exposure is definitely something that you're exposing yourself to, and the outflows, not just a nominal amount, but also the growth is something to consider.
And this derivative risk is, I mean, you know, like this is not something that you would instantly think about, but it's a really, really good point. And I think it's very valuable information for those of the banks who are sitting in the room, considering entering the market, offering digital assets. Hopefully these insights are very useful to you.
Quick thing, I don't know if there's a lot of risk teams here, but the risk is still there, right? But you're not reaping any benefit by not offering the asset class. So obviously this is not a one solution fits all, but it's still something to keep at the back of your head.
It's nice. And you said you measured between 2019 and 2023. Is there any insight in there about fluctuations? Was it like a growing trend? Is there any data to share there that's useful?
You mean after 2023?
No, between 2019 and 2023, was it an exponential growth that you've seen? Or was it a slow and steady?
It was driven by the market, you know. For sure, we see this the same right now. It's really driven by the market, and especially driven by Bitcoin. So if Bitcoin is going higher, then we see more interest. If we reach like this 100K or something like these points, then for sure we have a strong interest from our clients, and most of them follow our buy and hold strategy.
Okay. Yeah, there's that Bitcoin greed index, which is very fun to watch. So we talked about what banks do have to lose if they don't offer digital assets. Let's talk about what do they have to gain. Where do you see the biggest benefit? And of course, now you have 6 months of data to look at.
I guess first of all, we believe in the blockchain technology. We believe in the upcoming shift from traditional to digital assets. So I guess it's absolutely necessary that you are prepared for this moment. So anyway, you have to move at some point as a bank on your journey. And what we see is that for sure, clients coming back to us since the last 6 months, we have incoming flows. We have clients which did the transactions somewhere else, and now they do it via us, as well as we see that a lot of new clients which did not use us for investments, use us for now for Bitcoin investments, for example.
And from your end of the table, what do you see when, of course, I'm sure you have this conversation on a day-to-day basis with banks. What do they have to gain?
I think there's a number of things, and yes, the conversation is very common. One is just education, right? They develop or they pick up information that they can ultimately leverage in the future, even if their interest, for example, is on the tokenization side of things, right? And using blockchain technology without necessarily the crypto as an asset class as a starting point. So there's a concept of future proofing. One thing that was mentioned by Fritz earlier in the previous panel is this concept of cross-selling, which is very popular. I think this is especially true, obviously, when it comes to retail banks that are targeting slightly more digital savvy, slightly younger audiences. There was a number that was mentioned, and I wouldn't be surprised if this was also the case for ZKB. And to add maybe a little bit of spiciness to the argumentation, revenue is an important one. There's all sorts of ways of ultimately having a very compliant setup, which today can still be generating quite a lot of fees. In the starting position of most banks, where you're enabling buying, holding, selling without in-kind deposit and withdrawals, it can net quite a bit. What we normally see in the market for a full loop, on-ramp, off-ramp, and especially with FX, we're potentially talking about 300-400 bips, right? So these are still exotic asset classes. You can still margin quite a bit with the most regulated, most compliant, and most secure type of setup. This is also true, by the way, of exchanges, right? So this is definitely something that's driving more and more. And whether it's the outflows analysis or whether it's simply looking at the market and making some good assumptions, the business case generally is there. And there's plenty of examples like the one in ZKB that new banks that are looking into coming into the space can simply look at, copy, paste, and adapt, of course.
Great. So now that you have 6 months of experience, and I think you're going to sort of put numbers behind what Alessandro just said and give quantifiable measures. How is it going so far? What are the takeaways? Sort of, do you have any metrics for us that you can share regarding, the volume, who are the users that are mostly using the services? I'm very curious, and I think everybody is very curious in the room.
Yeah, usually I have a slide, and I can read it from there. So now I have to take it from this paper. Yeah, it's funny.
And make sure you have your pens and papers out so you can take notes.
So it's really funny because a few weeks ago, the University of Lucerne released a study about the typical average crypto investor in Switzerland. And they said this is a male, and it's around 20 years old, and he invests around 1,000 Swissy into a ticket to buy cryptos. After 6 months, we see it a little bit different. So our average crypto client is also male, but is much older, is between 30 and 50 years old, and the average ticket size is almost 15,000 Swissy. So we have much higher ticket sizes as expected, much higher ticket sizes as in our business case, which is very good. So what we see is that not only retail clients jump into this train, it's also clients from the private banking. And that was a big surprise because our private banking team said, oh no, our clients are not interested. So it's more from the retail side. And what we see now is, oh no, it's coming from the private banking side, therefore we have the higher ticket size.
Were you happy to prove them wrong?
Sorry?
Were you happy to prove the private bankers?
Yeah, absolutely.
Say,
absolutely.
I told you so?
So what is also very interesting is that at the moment we offer only 2 currencies. We have Bitcoin and Ether. And, but for our clients, more or less, only Bitcoin exists. So we have a ratio from almost 88 to 12. Our clients, 88% of our investment is in Bitcoin and only 12 in Ether. And the most interesting part is that from the clients which buy cryptos with us, 40% of them, 40% of them did not have a security account with us before. So they only hold cash with us, and we try to sell them funds, we try to sell them bonds and equities and everything, but they did not want, but they jumped now on the Bitcoin train. That's really interesting. It's 40% is a really high number. I heard it is something similar with other banks. So it's quite interesting that you can attract so many people to invest in Bitcoin which did not do any investments before.
That's very interesting. And I think you told me that the notifications, like on the banking app, get clicked way more often for crypto offerings than other.
That's really true, because most of you did not know that we offer such services because we are not allowed to make a big marketing campaign like others. We have no perfume or something like that, unfortunately. What we were allowed to do was only to do it on our mobile banking app, as you mentioned, Niki, and that was really crazy to see how often the customer clicked on this message and went to go through the full message.
So aren't these facts very powerful? I hope that you agree with us that getting insights into such a project after 6 months, I think, is really validating. Of course, you know, we are called the Crypto Value Association, so you know our sales pitch. But the point of this conference is to bring together the traditional banking industry and the traditional financial services industry and our digital asset ecosystem and show you that our industry is maturing, that we have institutional great service providers like crypto finance and many others who you have seen today on stage. And it is true that people are interested in getting on board, maybe with a small ticket item, maybe not, but it looks like the clients are driving the change for the banks. We only have a minute left, so I want to ask 2 quick questions from both of you. One of them is, are banks who are not yet offering or not working on an offering yet, are they late? Should they hurry up?
I'll maybe start that one. I don't think so. Again, there's not that many banks that are live today. There are probably closer to 40 to 50 at a European level, many of which, as we know, are here in Switzerland. But compared to the past, there's also newer solutions that allow to get to market faster by checking all the boxes. An example, Clearstream launched last week an offering for all their clients to do crypto custody, right? So that's just an example. So you can leverage a lot of the connectivity more and more easily as the market progresses.
I guess it's not too late. But for sure, you should, as a bank, you should deal with the topic. And I see more and more that it take part in the upcoming strategy. So I think it makes sense that you mention it in the strategy, especially if you have a strategy for the next 5 years or something. It must be there.
I love the must part. And then the last question is, what would be the 3 tangible, actionable advice you would give to banks, like 3 tips for this journey of onboarding digital assets?
If it's okay, I'll condense it to 1.
Yeah.
Start simple, but start.
Yeah, tip number 2, call me. That's the best way to do it. No, it takes time. For sure, we will support you in many ways, but it takes time. It's less a technical issue to onboard that you can offer such services to your customer. It's more an administration hustle. Contract negotiations, especially the FINMA application, takes time.
Thank you so much. I really appreciate your time and sharing your insights. Please give it up to these 2 wonderful gentlemen. And find them after our session. I hope you stay around for the networking apéro so you can chat with them later on. Thank you.